Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so talked for a long time about the volatility. These low volatility environments don't last. We certainly have seen the return of volatility in the last, call it 5 sessions or so, back to last Wednesday. So what it meant yesterday was basically a trend down day that got into 2 o'clock, and we did a test of mid-band and a higher low at the mid-band at around 48, 47, and then it ripped it up the rest of the day. And now we are back challenging the key area. You've got the 9-day, which we talked about being very important yesterday. That's sitting around 62. And you've got just above it the weekly pivot at 25.63 half. So I want to show you guys our 5-minute chart. It's the same chart that we use in the room. So going back to yesterday, you saw the proprietary moving average. You saw the opening print at 63.75 be effectively pretty much the high of the day. Could not get daily pivot back. And then you see the stairs down. And we shorted them all and held them all. We took profits down here. But the key moment of the day was identifying this move here, 47.5, which is the daily mid-band. Daily mid-band. The green line, okay? When it made a higher low at the green line, that's what set it going higher basically for the rest of the afternoon. You did a test here. You did a big test of the proprietary moving average, and then you went ahead and closed on the highs. So we were short until about 2 o'clock. We got long until 4 o'clock. Ended up being just a gigantic day in the room, and it's because price and risk, there was a tape to trade yesterday, and we've seen that the last 4 or 5 days with regard to this market, and I would expect it to continue. So what do we see in the overnight? Well, in the overnight, we see this kind of, gradual attempt to move down. This is the daily pivot. They weren't able to take it out all night. Then we walked it right back up to 25.62, which is the 9-day simple moving average. And what you're seeing now is we got a little hiccup here. Apparently, Janet Yellen is out of contention to be Fed chair. That kind of hiccuped the market down to 57.5. Stopped me out of my long runner at 11 handles, but that's life. Now what you're seeing is an attempt by the bulls to hold the 5-day midband, to take out the current high, Globex high at 63.25, and try to convert weekly pivot. Whoever converts 62 to 63 half today, whoever gets that on their side is going to win the day. It's pretty simple. So what do the bears want? The bears want this all to be just a great big, they just want a great big, 30 minutes. They just want a great big lower high, but then they got to go make a lower low. So let's go to the hourly chart. Okay, here's your hourly chart. So it was a lower low, lower than last week's low. That's a good thing, okay, if you're a bear. Then the dip buyers come. Look, the dip buyers are not going to go away. This is a generational thing almost. And they're going to keep coming back until you knock them out of the pool. So your 9-day is 62. Weekly pivot area, weekly pivot is a key resistance area. There is my Captain Obvious soundbite for this webcast, okay? What's interesting to me is the hiccup from Yellen went right back to the hourly midband and held basically on a dime. So what I'm going to watch as we get into the rest of the day is, does the hourly midband hold up as the day progresses? I don't know. We'll see. What the bulls want to do is convert here. They want to get back to this lower high from Tuesday at 70.25 and exceed that. If they do that, you know what? We're going to get another all-time high. And people can start complaining about how the market never goes down, this, that, or the other thing. What I would say is the market just did go down. It just went down 30 handles. This is a two-sided market. This is great volatility. It's a fantastic trader tape. It goes back to the webinar we did Tuesday after the close. You don't play for the bulls and you don't play for the bears. You play for yourself. You're a trader. You don't care if it goes up. You don't care if it goes down because you don't get bonus points one way or the other. So trade what you see, trade price, trade risk. That's what we do, and we do it very successfully. If you want to come in and see what we're about, we would love to have you. I have a lot of people out there that have been sending me, emails and notes for a long time. People that have gone away because the volatility was too low. If you're waiting for somebody to shoot off a starting gun and tell you when volatility is back, bang, it's back. Okay, it's time to trade. We got the trading tape back. Low vol stuff never lasts, just like high vol stuff never lasts. Everything reverts back. Very nice trading tape. Respect risk. Pay attention to price, and you'll be fine. All right. So I did a ton of videos yesterday. I plan on doing a ton of videos today. I will see everybody for the midday update. If you want to take a trial, come check us out. The link to the Trader Psychology webinar is up. I would give that a very I would sit down. It's an hour long. Sit down. Everybody has a different take on trader psychology. This one is ours. But I think there's some good content in there. Whether you trade stocks, bonds, options, whatever you trade, there's some good material in there for people. All right, everybody have a great day. I'll catch you for the midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.